Let's get it. Bitcoin needs to hold the line right here. There is a lot of fear in the markets right now, but there is also a lot of different support ranges converging at the same point. Today, we will talk about why I think $69,000 was not the top of this halving cycle. So let's go. What is up, everybody, and welcome to the Crypto Cabin. My name is Tom, and in today's video, we are going to be talking about Bitcoin, about how we need to hold this level right now. If you're new to the channel, please scroll on down, give this video a thumbs up, and hit the subscribe button. Then click the notification bell and select on all so you get notified for when I post these new videos. Without any further ado here, let's jump right in. So we're talking about Bitcoin predominantly today. We have a lot of different things going on. I kind of took this chart pattern with the white lines that I've added in onto this chart from this article over here, which I will tag below or a link in the description. But basically what we have here is a wedge pattern that was forming, or a pennant pattern, symmetrical triangle, whatever you want to call it. We had the top back from April, and then the local top back here in September before we came back down. And we've got this upward sloping trend line matching up with the bottoms there. So this line that we have descending here, which was previous resistance, we could now potentially be flipping as support. We also have this ascending trend line, blue line, all the way from March of 2020, which we are still holding as support. The 200-day moving average is right there as well. And we've got this whole yellow box support area. So this is a ton of different areas of support coming into play right at this level, right at about $50,000 or $47,000, just above 47,000. This is going to be a crucial level to hold. Let's start here with this article from Jordan Finiseth, who says that the behavior at 47.5K mirrors the pre-breakout 2017 markets. There's a few different charts that he looks at here. Mainly, if we keep scrolling on down here, there is this one as that we need to hold 47K, which basically that chart that I had there showing all those levels of convergence of where we need to hold support is being echoed here. So we do need to hold that. That's where this kind of red box is at that he's talking about. If we break down, then we would need to hold right around 42,000 into this orange area right here, which is where he says we've held support twice already, both in February and September. So this is the February dump there, and then September is over here where we were able to hold that. But as of right now, we are still holding that $47,000, $48,000 level until further notice. Michael Vandepop is saying some very similar things in that the $40,000 level, or the low $40,000 level, is the make it or break it level. So if we are able to hold that, that's where that big wick came down into, is right around $41,000 to $42,000. That level is extremely important. So we've already wicked into it. If we do come down, we would need to hold that. But as he says here, after that wick, the close was above 46 to 47K, and we'd prefer not to lose that at all. So same levels coming into play from his analysis as well. This is that pennant formation that we are looking at here. And so TechDev takes a look at this pattern that happened back from before the C dumps. This would have been 2019 into 2020. How we had that breakout kind of above that descending trend line, came back to test as support now, and then look at this run afterwards. That is potentially what he is also seeing here. A lot of people kind of discredit this C dump because it was such an anomaly. As you can see, it was a huge dump, and then it came back and was able to recover fairly quickly to get back into this triangle. When you look at the RSI, it's also performing a very similar pattern from way back when, very similar to right now in regards to breaking above this descending trend line, coming back down to test as support, and then we rallied back up. This is obviously never an easy thing to go through, these types of corrections. However, we do need to be able to withstand this, in my opinion, because if you can't handle a 20, 30, 40, even like a 50% drop like we went to, if you can't stick around for that, then you do not deserve the big gains that are potentially coming. So the biggest rewards are reserved for those that can persevere during times of struggle like that in which the market is currently facing. There's also another comparison here to 2017 before we started going on a big run. So this was in March, April, and May of 2017, comparing this pattern to present circumstances where we had kind of a double top there, had a pullback, and then we came back up to retest that line, which in this case would be right around $65,000 before another small pullback, and then off we go. So if we're looking at the Bitcoin chart, like I said, that's March, April, May of 2017. What was happening there? We would have had this sort of run here, a little bit up there, little pullback in April, and then this is what happened next. So that big run from right about $1,200 all the way up to almost $3,000 before we had another big pullback there again. And as we all know, this was still part of the extended bull run. You'll see a lot of comparisons to 2013 or 2017, and I think while these comparisons are great, obviously is not indicative of what is going to happen exactly, but it definitely does show what Bitcoin is capable of and what it has done before. But as we all know, the 2013-14 cycle was not the same as the 2017 cycle. So there's no reason why 2021 should be the exact same as either one of those. However, there definitely are similarities, and I do think it is very interesting to pull similarities like this just to see, where things could potentially be heading, but we'll need to see if this plays out the way that it has before. Lastly here, let's talk about Plan B's reasoning behind why 69,000 was not the top of the market. And I do agree with him because there is a lot of different things happening this time, and everyone says this time is different, of course, and I'm sure everybody was saying that last time. But when you take a look at this chart right here that he posted, if we were to have 69K be the top of the market, then Bitcoin would basically need to go through something that it's never gone through before. Either it's not going to go through an 80% correction like it has in the past two cycles, or it would have to go below the 200 weekly moving average. So in order for Bitcoin to keep along its trajectory of what it has done historically, 69K would not be the top of the cycle, and we would still have further upside here. As he says right now, if 69,000 were to be the top, a typical bear market goes down 80%. That would bring the bottom down to 14K, which would bring it below the 200 week moving average, which is currently at 18K. So, this has never happened, and in his opinion, will never happen. Like we said, there's also different things happening this time, growing adoption and all of that, like we've talked about multiple times before. Many different big companies holding on to Bitcoin now, countries adopting Bitcoin. And so there's a lot more big players here, whereas maybe in 2017 it was mainly driven by retail investors not wanting to miss out. Right now, though, we've got a lot more institutions that are potentially more likely to hold for the long term. Regardless, I do think people always talk about, how this cycle is different, which it definitely is. But then at the same time, people will say that, it's really not. So it's different in the fact that, yes, we maybe have different players in this time, but in my opinion, it's still the same when you look at, these other metrics and other charts that we are going to be looking at here. And hopefully this cycle does continue and then Bitcoin doesn't do anything different than it has before. Or maybe we never see another full-on 80% correction again. Maybe they're a little bit less. But as always, you just need to wait and see how this will play out. Take some profits along the way. Typically, like I've talked about before, here is a really great tool, the Bitcoin Fear and Greed Index. And if you sell a little bit early and buy a little bit late, that is okay. You will probably still be ahead of the game. But come along and look at where this Fear and Greed Index is at certain points in time. Typically, if we're under a 40 or especially in the 30s, that is usually a good time to buy. When you get above 70, that is typically a good time to sell, or even 60 to 70. Take a look at this chart and compare it to the price of the Bitcoin chart, and you will see that if you bought and sold in those ranges, you were typically doing fairly well. So typically what you want to do with this is buy when we are in fear and sell when we get into greed. And that doesn't mean put your whole allotment in at one time, right? That maybe means dollar cost averaging in while we are in fear or extreme fear, and dollar cost averaging out while we are in greed or extreme greed. What history would say right now, being in extreme fear, would say that now is not the worst time to potentially be dollar cost averaging into Bitcoin, or at least buying some, especially with all of these different levels of support coming in, like I mentioned before. And honestly, the sentiment right now is very close to where we were, or sometimes even worse potentially than we were back in September. Back at the end of September, the Bitcoin Fear and Greed Index got down to a 20. At this point, the lowest we got to here was, I believe, a 18, or a little bit below that maybe. Yeah, so we were at an 18 on December 5th, and in September we were only down at 20. But of course, none of this is financial advice. Always do your own research. Take a look at other articles that are out there. Take a look at other content creators. Take a look at what they're saying, and then come up with your own conclusions from there. But based on what I'm seeing, I do believe that there is still another leg to go in this bull market, barring, impending doom of the entire globe. So that is it for today, everybody. Thank you so much for watching. And if you are new to this channel and haven't done so already, please scroll on down, hit that subscribe button, hit the like button, and then press the notification bell and select on all so you get notified for when I post these new videos. I appreciate every single one of you, and I will see you next time on the next episode from the Crypto Cabin. Let's get it.